Welcome Arnoud, Sido, Daniel, Astral, Mike, and Kijos. Good to see you. Um, we have some interesting charts to talk about. Let's wait 1 minute longer for some people to join. But overall, interesting, at least it was interesting. Right now it's at the mid-range, so that's a bit unfortunate. No trades at the mid-range. But we basically followed the plan. However, entry trigger was not available. But the pre-planning was solid again. Welcome Wes, Lise en Uncle Kev. Good to see you guys. Let's just get started. We had this, so overall we are in a downtrend since we broke this range to the downside. And you can see that we basically had this downward structure, kind of low, lower high, lower low. So this was the region where you could print your lower high. Oftentimes in a downtrend or an uptrend, price likes to make pretty deep pullbacks before going back to the lows. So let's see, this is probably, well, yeah, this is deeper than the 786, but still these are the regions where you can often expect that trend continuation. So since the start of the week, we mapped out this range high, that's not true, range low, range high, this is the range, but this has been our Monday's range. This is Monday's high, Monday's low, but that was the cleaner range in this case. However, it's not a valid way to pull your range because technically you should pull it from low to high, where this is your start of the range. Then you can technically extend it to that second one. So then you still get the same, basically 1, 2, 3. But in this case, yeah, it's cleaner to just take it from that. But technically, if we stick to the rules, this is the proper way to follow the system. So then you have tab 1, tab 2. And kind of the tab 3 was more of a deviation, aka bearish period 3, which came into that supply created during Sunday, the dump lower, close to that anchored VWAP, which is the overall downtrend. And we had that daily point of control we talked about. Let's see. Yeah, so since Sunday we had that aggressive push lower where we basically left behind this daily point of control. Price loves to get back to those levels. They are basically just magnets, liquidity magnets, because during the weekend most of the volume was at the mid-range, and then you get an aggressive dump, but oftentimes price tests it and then continues lower. If it doesn't test it, then often it wants to get back sooner or later. And that was that PY we had mapped out around 78k as the highest probability level to look for a reversal. So price also came into it. However, not really a clean trigger, because yeah, it was clean ranging price action, so a lot of chop, not something super clean. Then we had that push higher, but here also a lot of chop. So here it's important to not zoom in like this and then on the 1 minute and look at it. Oh, what's happening? This is just mainly chop, designed to take your money. But then overnight we had an interesting move with this push higher into that daily point of control, which was basically resting around here. So price tapped into it and then formed like a local 1, 2, 3, and then broke down. So the pre-planning was solid. However, was there an entry? No, not really, because this was basically the deviation where it sweep of the high and then price came down. But in this leg, there was no structure. So you cannot confirm the breaker structure already here. So this is just bullish structure. And this can just be the higher low for the higher high. And this is where it gets interesting, because here you have basically high. This can just be higher low for the higher high. Then you have uptrend continuation. But instead of the uptrend continuing, price swing filled the high. And we know an SFP is can be a bearish sign, because if you have a strong uptrend, then you want to see continuation. So at least a break above. This is just a wick, which shows that the trend doesn't have the strength to push higher. And often the low that brought you there, which is this low, is then a weak targeted low. So this move into it was pretty aggressive. However, the SP, that was the signal that it can be bearish. However, I gotta stick to the rules, and it is that I can only short it if I get an internal break of structure. The only break of structure here that I had is basically here. So this was the bearish boss. And you can start zooming in. Was there a structure on the 2? No, also not. Was there on the 1 maybe? Like here you can start find, but if you really start to zoom in to find it, then it's not valid. But even on the 1 minute, it's not valid. It's all internal. So there was no break of structure. So basically no entry. And that's just part of the game. So then this is the boss. But at the moment that you break it, you are already here. This is not a short I would take, because now you are close to the mid-range already. If we look at the mid-range, it's here. So, and you basically play the deviation. So then your target is the opposite side of the range. So then the RR is a 1.6. Well, that's not something I will take. So my pre-planning was that we had that very, very local, super low probability potential model 1 right here. Valid to look at it. However, context-wise and location of the chart, etc., very bad. So then you want really clean triggers. And that's also why I said I'm only interested in the model 1, which is the 1, the 2, the 3, 3 sweeps flowing over into the model 2. So that is we had extreme demand right here. So what I was looking at is if we moved into here with structure, then clearly broke that back to bullish, then I would have tried along. Because the model 1 in the model 2 is basically our highest probability model. It's always super clean to trade. However, as you can see, price just came down, low, lower high, and then there was no structure here either. So this was invalidated. However, from a trading perspective, the cleanest would have been if we moved from here, then came up back into that supply, broke structure back to bearish, and then shorted from here. That was what I wanted, which would have been the cleanest from an execution perspective. But yeah, you not always get what you want. So instead, price just nuked lower and came into this demand, which we remember from where was it? Yeah, yesterday, where heavy negative delta came in, so a lot of sells, which got absorbed by a big player right here. So we already knew that if we retest this level, that buyer will probably defend it. You can see that yesterday the buyer indeed defended it, because from here we made just a higher low into new higher highs. And this is the lowest demand, basically the key demand for the buyer. And right now we are bouncing again from it. However, it doesn't look, it looks pretty weak. And we are at mid-range, so basically for me, nothing to do. But I have a few ways how I want to approach this. We still have this ugly liquidity below us, which is also basically stacked higher lows. So all liquidity, these lows. And from this low, you also have a naked low and then this low. So if you combine that, this is basically quite a lot of sell-side liquidity. We took liquidity at the highs, basically printed a bearish PO3, where this was the deviation. So you can kind of see it like the market is in a range. Market makers want to just grab liquidity. They don't care about the direction at this moment. They grabbed liquidity at the highs. Often target is then the liquidity on the opposite side, which is the range low. So my bias right now is that we trade towards 76k and we gotta take all this liquidity. However, the bias can play or is likely to play out that we go here, but that does not mean we can make money on it because we still need to find the setup. The only setup I can find is that we need to get back into premium towards, we have some fair value gaps right here or single prints. We have the VIP, confluence, and that supply. And then you are back in extreme premium of your range. That's a level where you want to short. You don't want to short your mid-range. That's just no trade zone. So now it's a matter of if the market wants to provide us with a short. Because I'm only interested in it if we can maybe consolidate here a bit and then come up. Then I'm interested in the short. Kind of model 1 into model 2, or just a deviation setup, range high retest down. Basically the same. But I want to keep this liquidity intact. If we already start taking out that liquidity, let's say this, and then come up, that is way less optimal. Then I'm not interested in that short here too much anymore. So I want this liquidity to stay untaken, then get a move back up, and then here show some weakness, and then this is a super, super clean short. One of the high probability shorts you can get. So let's see if the market wants to provide us with that. If we already go down, then I'm just gonna watch the range and see how we behave if we take out the lows. So then if you come down, take the low, then this can potentially flow over into an accumulation again. Just the same as always. Right now you can see that way price moved up, it left a lot of liquidity behind. So I wouldn't be surprised if it takes all that liquidity and then we just continue ranging, taking liquidity to both sides. That's a bit of the bias for BTC. We should not forget that we are in a downtrend. So you can also just go down, lower high, lower low, that you break this range to the downside, and then come to that daily market structure. And that maybe this is the bigger range that's in the making, where low time frame range goes over into the higher time frame range. So we have to keep that in mind that we are in a downtrend. But overall, we have pretty clean levels to work with. Just unfortunate that there was no structure in this move. Otherwise, I would have shorted it. Welcome, by the way, Barabuteo, Zlatan, and Matt. Matt King. Was there any order flow signals in the third tab on BTC? On this one? Let me watch. No, not really. There was not a big delta bubbles or anything, so not super aggressive buying. And yeah, nothing in the order flow as well. So it looks more like, because you already sold off here and then aggressively came back up and then sold off strongly. As if the market went down, but they wanted to grab a little more liquidity above these highs and then sell off. But that was not really a trigger. Otherwise, you can be a bit more aggressive by not waiting for a break structure. But overall, you still want some structure. This showed a lot of strength. Then either they wanted to grab liquidity and then push it down, or just a big seller stepped in here, because this move up was pretty aggressive, but the move down also. But yeah, no entry triggers. And right now, bearish momentum is pretty strong. So best case from an execution perspective is that we consolidate here and then go up, and not already take out all this liquidity. Then there's not really anything to execute on. Then though, there might have been VSA on volume candles was decent. Yeah, I don't use the volume profiles, that thing. But I know I've seen it, so it can be interesting. Maybe you can share it in the group if it's worth sharing. So that's a view on BTC, just waiting, and let's see the volume profile. Yeah, right in the middle. So this is no trade zone. USDT, oh shit. USDT is still in that confirmed model 1. So our basically our target is the range high, until proven otherwise. And from the low up, price made a clean uptrend. And the 4-hour market structure low is basically right here. So we can count it from the low up. Higher low, higher high, higher low, higher high, higher low, higher high. So this red line, is our 4-hour market structure low. And it is always super nice to have a range being formed with clean confluences on the top side and on the downside. Because then there's reason for price, for example, to accumulate here. Because in this case, bulls don't want to lose that 4-hour bullish structure. So if you then see that wicks are getting bought up, that's a nice confluence, because they don't want to lose that 4-hour structure. So we have this new range with tab 1 at the high, tab 1 at the low, and the confluence of that anchored view up from the low up, which we tapped. So this is a super nice range in the making. It's early in the making, so it can stay here for a few days and then watch, do we take the highs or the lows. But this could offer some great trading opportunities going into the weekend / early next week. So alerts at the range extremes, and then just play it from there. Again, here we are in an uptrend, so accumulations are more likely to play out than distributions. Then quickly gold, because yesterday we played gold with a few. I also traded it, but I executed it horribly in hindsight, which is also part of the game. But the reason for me taking the trade, even before the break structure, let's delete this for a moment, was that I was watching this local range. So trending down, so local from low to high. I was watching this range with tab 1, tab 2, and this is a valid tab 2 for me, because you have clean move back in the range and then down. So then you clearly can validate this as tab 2. Pretty local, but the model was also local. And then tab 3, and here you see that price took extreme liquidity. Again, took extreme liquidity and not leaving any demand behind. So clearly every level got mitigated right here, which shows that there's accumulative behavior. And you also have that kind of rounded bottom. So you see this rounding off, which shows that often algorithms are just buying it up, eating supply, creating demand. And then if you zoom out, often you will also see that it's that rounded formation. Where is it? Yeah, then if you zoom out, you can see those wicks, also with that rounded bottom, showing that there's absorption at those lows. So before the breaker structure, which was, if we look at, it was also 15 minutes, I believe. No, 10 minutes. So here you have low, lower high, lower low, in which this was basically your breaker structure. But if you play that, then you were already at the mid-range. So I was pretty zoomed in, and I saw this 1, 2, 3, very local model 2. Then here was no demand left behind, except this tiny demand. And the moment this got mitigated as well, when we pushed higher, I knew it is super likely that this is an accumulation in the making. So I entered somewhere around here. I'm not sure anymore exactly where it was, but I believe around here. And my stop was even at this low. Because you have 1, 2, 3, basically 4, no liquidity or demand left behind. So there's no reason for price to come back to this low. If you want to be really safe, you can use the Wyckoff low, which is this low. But in this case, for me, it was worth taking this low. And the technical target of the local model was the local range high, but it could expand higher into that supply. So what I didn't like was that, let's do this back. We had that super slow grind up. So initially it pushed higher, we got a break, then came down and also saw good buyback where liquidity got taken and then pushed higher. But then this is super dangerous price action where you basically don't move up, but very slowly move up, creating a lot of sell side liquidity. And then you only need a little break of structure, and then all these stops get wiped out. And it's also what you got. Basically you had clean structure, high, higher low, SFP, break, and the moment you get that break, right here, you directly see that price slices straight through it. So I didn't trusted this grind up. So I moved my stop loss. I took a little TP after taking around this liquidity. So here I took some TP, 20% or 25%, and I moved my stop loss to break even. And that was more to secure the profits, and I didn't want to lose money, which is just a mindset thing. At that moment, I didn't want to lose money. But if you want to stick to the legit rules, then this was still your protected low. For me, if you want to be really safe, this was the safest invalidation. But if you would have used that, you can also see that here all demand and liquidity was taken. But let's delete it for a moment. From this move, price left demand behind. So the purpose down here was to grab all liquidity and mitigate all demand. Basically leave nothing behind and then push price higher. However, from this move, we pushed up pretty aggressively. And what did price leave behind? Here a 3-minute demand zone, which is untaken liquidity, which market makers can use to take it before reversing. So if you look at it from that perspective, what did price do? Mitigated the extreme demand once again, therefore leaving nothing behind anymore. And then boom, free reverse. And if we then look at where was my break even, look, I was now, because I moved my stop loss from that protected low to just an internal low, I was part of liquidity, got stopped out, break even before the plan played out. for a 3R, and then I would have let a runner for a bit higher as well, which could have been 6 to 7R. So execution wise, could have been better, but yeah, those are also part of the game and you can learn from it. And right now I'm looking for the kind of 3-tab setup where this is tab 1, this is the tab 2, and that it's kind of a model 2, where you then come back, structure, confirmation, and then I'm looking for longs again, where this zone becomes very interested. This is our market structure, bearish market structure, with a big gap above it and supply. So I think good reasons for price to come there. And yesterday you could clearly see that the market makers have been accumulating here, especially here on the low, and on this retest they stepped in again, protecting their positions. So that's why I think a model 2 here is more likely than a model 1, purely because it was clearly visible that buyers stepped in here. So I think it's more likely for them to put in a higher low, defend their position, and push it up again. So we have some nice confluences here with a basically wick demand, but it's also super clean 50-minute demand. You can see right here, before that expansion higher. And if we pull the fib from this low to that high, then the demand overlaps directly with the fib. That's always a super nice confluence. So I'm looking for maybe a local range, sweep, and then if we break it back to bullish, I'm interested in longs. However, it's Thursday, tomorrow Friday, so I'm pretty sure that tomorrow it gets confirmed again. Because every weekend we basically have Wyckoff models, or every Friday. So probably tomorrow again. So that's what I'm looking at for gold. Can still turn into a nice trade. Let's see the chat. The middle chops, the edge pops. That's a good one, yeah. That's a good one. Floppy, look at that. Welcome, brother. Good to see you. The legend in the building. Sir Flow, nice. Hype is popping. Nothing is stopping the hype train. Really like those trade breakdowns, TD inside full. Great, that's the purpose of them. And also, yeah, if I make a mistake, you guys can also learn from it, because I'm not perfect either. Let's go to hype, because there we have also learned some interesting insights from. It's crazy strong. Crazy, are we at all-time high already? Ah, yes, happy all-time high. I've been taken. But the interesting insight from this was that, again, most people were watching for shorts. However, did not make a lot of sense, because the dominant trend is always leading, which was clearly to the upside. If we just look at daily structure, and from the low up, with basically a high, higher low, higher high, higher low, higher high. So interproof otherwise, this is likely to just be the higher low for the higher high, which is in hindsight also played out, of course. But then we had that super clean reaccumulation. So let's delete all this stuff. Let's delete everything. You are trending up, so you pull your range from high to low. Then this is your range. Tab 1 at the high, tab 1 at the low. Here you validate your range. Tab 2, then you already know we are in a high time frame uptrend. We are taking the lows instead of the highs, aka accumulative behavior. And then here we left a lot of buy side liquidity behind. Took the low, aka a model 1, and then had that crazy push up. We were looking for entries here, but never got it, unfortunately. Even though we had a super local entry trigger here, which could have been the trade of the year, but unfortunately missed out. And then we pushed up into the range highs, basically already completing the technical target of the Model 1. But the thing is that from here, I already said this move is super strong. Then you can get a deep retrace, but it doesn't mean anything. And then made a new high. And this is where everyone was looking for that, for the distribution and this and that. However, it was already unlikely because you are in a high time frame uptrend. This move showed more buyer interest than distributive behavior. So I was always cautious of the distribution. However, I did take the Model 1 later here. First, we were also looking at potentially Model 2, but that's always, I don't like the Model 2, especially not in a counter context. So here we had the Model 1 with 1, 2, 3, and then internal bearish break structure. Basically a valid model. However, context-wise, you are still counter trend. So then you always want to be super careful. However, here you had a pretty clean 5-minute bearish break. Here a test of the range high and then sold off again. So I took the short somewhere around here. Stop loss, third tap as always. Target the range low. And this all happened overnight. Technically, just super valid trade. I will take this again. However, what I learned from it is that I now had a 10% limit TP at the extreme liquidity, which is basically your lowest liquidity level within your range. So that was taken, and then it full reversed back into new highs. So I took 10% TP overnight, and the rest got stopped out, break even in the morning. But this shows again that the uptrend can be so strong that price goes down to grab liquidity and then goes up. But it doesn't necessarily need to take the range low. Because what is the purpose of an uptrend? Why do you make pullbacks? That's to grab liquidity before moving up. So in this case, it was also the case that we had 1, 2, 3 Model 1 distribution. But the purpose of that is to grab liquidity, aka fuel, to push higher again. So in this case, it was enough for the market to grab extreme liquidity and then push up again. And from there, it was basically been up only full on squeeze. This is like bull market stuff. No real re-entries, it seems. No, you don't take the lows, so then you are only creating liquidity. So it's hard to get a re-entry then. But yeah, right now you can see that the big players that stepped in at that Model 1, which was here, 1, 2, 3, that the purpose of them was probably to load it off higher, which we said, and that's what I did. They pushed it from here 60% higher. So probably they're gonna take some profits soon. Unfortunately, this is not the price action I trade. So for the time being, hype is not interested anymore. But yes, a bit sick that we did not take the trade here. We were looking at it. Could have been a monster trade. But yeah, next one we catch. On Ripple, what do I have to say about Ripple? Basically at range low, range high, sweep, move back, extreme liquidity grab, and then here broke structure. So basically Model 2 distribution confirmed the moment you break structure. So now this is your protected high. So also here I was looking, can we get a move into here and then short it towards all that sell side liquidity. But price broke structure and is now already taking almost all liquidity. So not really interested in a setup here at the moment. Tao talked about the range yesterday, that if it broke above the deviation threshold, I was interested in longs. So this was our range low, range high, and this deviation threshold. So yesterday we clearly broke out of it, which means that this is your kind of your bullish range, break, retest, higher. However, you never got the retrace and just started expanding higher into that all low resistance liquidity. So yesterday I said if you break above here, it's likely that you trade towards this supply because there's nothing holding you back. This is all just liquidity. So the moment you start taking it, you just likely push a lot higher. And that's also what happened. Most of it got taken. Almost all liquidity got taken. So right now, not really anything interesting. Beside a retrace to here, that can still be in higher low. But locally, this is not something I'm interested in trading in. So we're waiting. Then last one. Let me first look at the chat, by the way. Nothing like an ultimate party without being interested. Yeah, that's true. Also for confluence, hype BTC is breaking through the min 1 VIP of the range with strength, so really going for it. Yeah, hype is the coin of the year, Solana of this cycle. And then last one, ZAC, also same case as with hype, where you could look for the distribution. We were also monitoring it, but I said multiple times, be super aware. That can also be pushing higher, because price was also above the value area high all the time. So if you look at it from range, high to low, and then at the range, then this was the value area high. And in a range perspective, you always have value area high, value area low. And in a range, you mostly trade within it and often above it. But then if you get back under it, that's a failed auction, and then price goes back into value. Goes below it, back in it, failed auction, and you are just back in the range. And if you hold above it or below it, that can mean that you find new fair price and then go down. So here price held above it quite a long time, which is bullish until proven otherwise. And also above it, there's almost no volume right here, which means that if you get acceptance, you can travel up very easily. So that's also what we saw. Just zooming in, you can see this, and that's why I always warn in an uptrend, don't only look at it from, oh, we have the one at the high, the bottom at the low. We take the high, so this has to be a distribution. No, because this shows why it can also just be an uptrend where you have high, high, low. Sweep is not good, but doesn't directly mean it's a distribution, because this is just basically higher, higher, low, higher, high, higher, low, expansion. So it can be a distribution, but it's more likely that it's just bullish continuation. So always be super aware of that. And then here I also showed that this was the range. Then here you also had like a super local 1, 2, 3. So that's a 3 drive, which is always something we do like. But if it's a 3 drive, then it's also basically a range. So then you can draw your range. And then we have to go to the lower time frame. But your 3 drive is basically model 1. So the target of your model 1 is the opposite side of the range. So this 3 drive got confirmed basically. You don't have really structure in the move. Let's see, do we have it? Maybe you even had structure. No, so there's not really any structure. So you only broke it to bearish here. in which this is your protected high and the target is your range low. But that played out because you took your low. But this is same as hype. What did price do afterwards? Range low, sweep, back in the range, aka tap 1, tap 2, and then price came back for a model 2 reaccumulation. And that is the more likely or the easier setup to play because you are in an uptrend. So here price can basically, we can just start at this point low, lower high, low, low, boom, break. The moment you break it back to bullish, this is your protected low from the Wyckoff model 2. And then your target is that high, basically your new range high, which is now that level. So the entry here was hard because you already had a strong move. So you could look for an entry here. Then towards your technical target is 1.2. But if you are in a bullish trend, then oftentimes an accumulation in line with your dominant trend, often you can get expansion higher. That's also what SEC did here. Not a bit of an expansion, but you should always take some profits at your technical target. But in this case, or like in a bull market, you can let them run. In a bear market, you can let your shorts run. In a bull market, your longs. But then you can get trades that pay you like crazy. This could have been a runner to 14R. So it's wild. So always trade in an uptrend. Rather look for accumulations and don't only focus on the distributions. Right here it played out, but then it directly went over into an accumulation. And that is the one that paid. So some interesting lessons this week. And from now, let's see. Yeah, prices above the range, above the value. Let's see. So yeah, nothing to do here for me. Maybe you form a new local range, or you come back towards your value area high, and then here you can look for trades again. But look, price is also in a bigger range. So there we have basically tab 1, the high, tab 1 at the low, right there. Quite a lot of liquidity there. So this can just be high, higher low, higher high, higher low, and now you made a new high. So this can also just come back, higher low, higher high, to trade towards that main range high. So it's pretty clean, pretty clean trend. So they can watch again. Let's say this is the high. What are the fib levels telling you? If this is the high, of course, because you can also just travel higher. But then you can see this is a deep pullback. But market always loves to make deep pullbacks just to wipe everyone out before moving up. So this can be higher low, higher high. Confluence with demand, fib levels. Maybe it's even near the point of control. Yeah, point of control. So if this comes back, everyone will probably say, oh, deviation, target, range low. But context-wise, it's much more likely that this is just bullish trend continuation. And then you want to look for the higher low and not for the sweep of the range low. So that's it for the ZEC. And then we basically have that and everything. BTC still around the mid range. So let's see if we get that move back up. Then I'm interested in shorts. The other coins, yeah, just explain to them. And gold, I want to see that reaction in this demand. And then see if we can get a trade again tomorrow. Shorts, I'm interested in shorts right here. And longs, either the model 2 right here, which makes to me a bit more sense. But it can also be that we extend it a bit more. That if you don't get a reaction, that you come here and then push higher. Kind of like this. It's super deep, but it can happen. So that's it. Are there any questions this week? Quite challenging with some very solid trades that could have hit. Like gold could have been a 3 or 4R. Hype could have been a 4 to 5R, which turned both into small loss. But you can see if they would have turned out a little better, then you are up 10R with only those two trades. Now it's just a bit unfortunate that one was a trading mistake or execution mistake. The other was just a bit unfortunate that they slightly front ran the main TP. But most important is to not make stupid losses. And then one win, you are back in the game. When in doubt, zoom out. That's a fact, indeed. Indeed. It's also with a very small range, which we had here. Like if you're super zoomed in, and it can look like a solid range. So then you have the 1, 2, 3, okay, return to zone. And then you can feel very tempted to take a trade. However, always important to then also zoom out, see where are you in the bigger picture. And does this then look like a good range? Or is this just an important price action within a range? With supply above, demand below. Then you already know it has to be either super clean or yeah, just not worth your attention and time. So let's see what we get over the next few days. And I've asked in the Discord if we're thinking about a new channel where people can we can talk about the emotional side of trading. People can do reflections on their taken trades, the emotions they felt, just to yeah, put more pressure, or not pressure, but more attention on the mental side, because that's something you very rarely hear about, while it's the most important part of trading. Because everyone can learn the technicals, but the emotional part is the hardest. So I got a request if I wanted to make a separate channel for that. But I think it's a pretty good idea. And so far most reacted positive to it. So maybe if you haven't done, show a reaction. Or just a heart or a big cross if you don't like it. But then I think I will implement it tomorrow. And then we can yeah, improve the Discord even more. So always if you have some tips or improvements or anything about the server, or just let me know, because it's a community effort as well. So if you guys have good inputs, just let me know, then we can work on that. And then for now, nothing rests me but thanking you all again for tuning in. Let's see if the next few days, or at least tomorrow, maybe in the weekend, we still get some solid trades. Right now it's in the middle of nowhere, so just waiting for the alerts to be hit, and then a new trade will come. And for now, thanks everyone for tuning in again every day. I really appreciate it. And then I see you guys in the Discord as always. So cheers, happy trading, and speak to you guys.